Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's @Finance. If you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities, sharing them with everybody in the community. We do that through midweek updates on Wednesdays, where I go through all the individual companies and the setups that I really like from a technical analysis perspective. And then on the weekends, I answer questions. Sometimes I go into topics and share a whole bunch in those specific topics during the weekend, either a Saturday or Sunday. Special is the coupon code if you'd like savings. It's 50% off the monthly membership for the first month only on the monthly membership. And a larger discount, it is $100 off for the yearly membership, which is a very good deal in my opinion if you'd like to switch from a monthly to a yearly or go directly into a yearly. All right, Steven Straza says the animal spirits are out in China as the most hated stocks in the world embark on a brand new bull market. Post from this week with some thoughts, all-star charts, Arc of China, custom index heading higher here. We've got a little bit of resistance up above. We've got a squeeze of a three-hump consolidation, 1, 2, and 3. Could also be seen as maybe perhaps a wave one, wave two pullback. And here we are ready to break out. What's causing that? Weaker dollar, declining interest rates in America, and a weaker dollar could push emerging markets and a lot of other, I'll say, non-dollar denominated assets around the world to go much, much, much higher. It is driven by currency exchange rates, the dollar dropping, and then money seeking other alternative currencies that are stronger than the dollar if this all plays out the way that I think it's going to play out. You'll also see precious metals go up, commodities go up, and emerging markets go up together. So it's not by happenstance. And if you are a believer in commodities, you could have gotten entry points all through here because this is a large move up and then the small selling pressure back. We could have been picking this off, and we did in some. I didn't choose China, but there were other opportunities that we just nailed, and we're still riding. We got a long way to go, guys. We'll get into it as we go through this. Tavi says, meanwhile, miners are enjoying some of their best profit margins ever at these gold prices. Remarkably, many of these companies still trade as if gold were priced around $2,000 an ounce. A significant re-rating is likely still ahead of us in his view. We've got gold prices at $3,500 an ounce versus the mining costs, the median all-in sustaining cost of $1,533. That difference of $2,000 an ounce is their production margin. It's blowing up. Now, we took some positions back in 22, 23. I think it was mainly 22, 23. In some of those companies that are up multiple hundreds of percents now, and they are producers in gold. We had nice double bottom patterns breaking out of the double bottom, and man, are they moving. They are moving. Now, what's a problem here? It says French bond yields are now problematic. This is the French 10-year bond yield. It has a falling wedge of a very long time frame, 40 plus years, breakout, a consolidation, and another breakout. What does this mean? Why does it matter? Because yields are driving this. It's driving the money rotations into precious metals. And people don't even know it. They don't even know what's driving it. Guys, when these big picture views are breaking out like this, You get in precious metals, you just sit and do nothing. Nothing. Now, what's going to happen going forward? What are some possibilities? If rates continue higher and we go and go and go and go, stock markets around the world, not including commodity currencies and emerging markets because they sell commodities, but the majority of ones that consume commodities and that are overvalued at the same time, well, they're going to get a headwind here. So there's a major factor going on that people I don't think are talking about all that much. You're going to get a headwind from interest rates, and interest rates going up means that money is leaving bond markets. So this is the 10-year bond yield. As this goes up, people are exiting bonds. So what that is it's two major asset categories where money is leaving. Well, where's it going to go? If it's leaving an asset category, it's got to go somewhere else. Yes, and that's where precious metals are going to shine. And that's also where commodities are going to do incredibly well. And then when they start to really take off and people start to take notice because people like things that move that are shiny, that's what I've found, they're going to chase. They're going to do FOMO. That's what they do. That's what they do best. It is ingrained into their DNA. They want to chase. So you know what? We're going to give them a chase. We're going to give them a big chase over in precious metals and mining stocks and commodities. Commodities are going to rip and roar through here too. They are going to do absolutely excellent as rates continue higher. Here's demand weakness. U.S. oil demand rose by 470,000 barrels per day, or 2.3% year over year, to 21 million barrels per day in June. Last time oil demand in June was above 21 million barrels was back in 2005, and it was at 21.2 million barrels per day. The print is also above the EIA's SDEO's forecast of 20.76 million barrels per day. What's causing this gigantic demand for oil? M2 money supply going up. As that goes up, and oil is in everything, money supply growth is oil demand. That's what it means. So when your number one commodity, which is also very inflation sensitive, sees inflation, it goes up because you got too many dollars chasing too few of goods. That is inflation. So breaking, the U.S. M2 money supply has surged 4.8% year over year in July to a record $22.12 trillion. This also marks the 21st consecutive monthly increase. Growth has accelerated since July of 2024 when the M2 money supply rose just 1.6%. By comparison, the long-term growth rate has averaged 6.3%, largely driven by the pandemic period. Meanwhile, inflation-adjusted M2 money supply rose 2% year over year last month, the largest increase since February of 2022. The U.S. dollar's purchasing power continues to erode, and here we are. There's the big, gigantic move in 2020. Boom! Massive money creation and bank loans in the system. A little bit of a pullback. That's your slowdown in the market. They had to redefine what a recession is because we did have two negative GDP prints, I think. And now we are heading higher again. Here we go. Coming back, Eric Yoon, $50 silver equals 45 years in the making. Freaking brutal as the cup and handle pattern is about to launch. We are over $40 an ounce. You know what's driving this? Yes, interest rates, the selling of bonds and money leaving the bond market and making its way to gold and silver and probably platinum and palladium and other commodities. So here we go. We're starting the big move. Oh, talking about silver, Silver Miners, SIL, has officially broken out of its 13-year ascending triangle. Here we go. Ready to go. Let's rip this thing. Why not, right? I'm positioned in it, guys. I'm positioned. I don't care what they do now. They want to go print money. They want to go steal purchasing power through the currency. Go for it, guys. I guess that's what you've been doing since 1913 anyway. Well, let's send these things in this market condition to the moon, which will be silver miners, gold miners, and the rest of the commodity complex will follow shortly thereafter, is my guess. So these guys will probably move first, although we have seen a lot of things bottoming that are inflation sensitive across the board: steel, copper, fertilizers, energy, uranium. They all look good, guys. They all look good. And this is the part of the cycle where things can rip together. They can rip together with that dollar. We got to watch the dollar. If the dollar drops, it's going to be, these things are going to light it up. They're going to light it up if that dollar drops. Just north of $40 silver, there is basically no volume on record, just saying. So what does that mean? There is no overhead resistance. We are ready to launch. We are in the fly zone. The fly zone means that you don't have overhead resistance. So as that overhead resistance becomes less and less, which we basically have above us, that's when things start to fly. And that's where we see where this thing will top out at, because there's no real resistance to hit. So we'll see. It's just a numbers game. It's just psychological numbers that people feel like they need to sell at. That's all that's left. Peter Schiff says Trump wants the Fed to cut interest rates so the government can lower its borrowing costs. But creditors won't lend the U.S. government more money if interest rates are not high enough to generate a return that is sufficiently above inflation or dollar depreciation. It's game over. Well, I think what they could do is that they'll lower the short end of the curve, and then we'll see the long end go up. If that's the case, well, then Peter is exactly right. And we'll see if that occurs. I think it will occur. My guess is that it will occur. And if interest rates continue to go up and they're going to try to save this system by printing a bunch more money, which they're going to do, well, we'll see the long end go up. We'll see the short end try to go lower as they buy a bunch of bonds and try to adjust the Fed funds rate lower, and it's going to be an interesting setup. That's what I'm going to say. Current mood on here for Brandon it says, they don't know that the metals bull market started. We only buy crypto. We only buy Mag 7. Well, I mean, yeah, we'll see what happens. We'll see. A big move in energy is coming, says Sam. The ASC Energy Futures Composite, an equal weight basket of crude oil, heating oil, gasoline, and natural gas, is squeezing up in its volatility indicator, the Bollinger Band. You can see it squeezing into a dead period. The dead period's this spot where we don't have much volatility. It is essentially dead. It's flatlined. The sinusoidal rhythm is done, and when that occurs, that's generally right before a big move higher. Here, you can see 500% in 2 years. We're going to see something very similar like that come about. Gold's our leader, so gold already shot up. That's front-running money printing. The money printing occurs, it goes into the system, and then this usually lags a little bit behind it with that money coming through the system. So that's looking good. We got Grady. We got to get Grady in here. What's his opinion? Said in the link post below that gold will break to the upside from its blue triangle. That is now happening. As been saying, the miners' recent bullishness was one of many clues that metals was going to break to the upside here. Oh, he plays that same game that I do. You see what the equities do, and generally the commodity follows. We've been playing this move all along since gold 8-year cycle low back in 2022 at the service, and the profits have been and are massive. I agree with them. They have been massive. This game here, guys, it's all about getting in low, getting a real good asymmetric opportunity, and then just sitting. If you know what's driving it, then you look at the leading driving indicators. You don't have to necessarily look at all these patterns. The patterns are the imprint of the herd psychology. but the herd is subjected to market conditions. And those market conditions are what is driving the patterns. So if the market conditions are driving the patterns, then what market conditions have to exist for gold and silver to go higher? That's exactly what I look for. That's a great way it's a great thing to be looking for. And then you just use the patterns as basically a way to ensure that the things are still going on. That's basically it's an ensure mechanism. Here's Dan. He says global net gas supply decline rate is 11% per year, says ExxonMobil. Need to add new production every year to offset the 11% decline just to keep production flat before meeting the 20% growth in demand per Reuters report flagged by Sanovo. Exxon, in the absence of new investments starting today, global natural gas supply would decline at 11% per year, resulting in a shortfall of about 250 billion cubic feet per day by 2030, or about half of projected global demand. Guys, we need to be increasing production about 30-something percent to overcome the decline and then meet the growth that is out there. This is going to be crazy. So, yes, rig counts down. Things don't look good in the short term. It takes something like 6 months for that to hit the numbers. Now, I was listening to some earnings calls. In particular, the frackers. The frackers are the ones that do basically complete the wells for production. With the rigs and the rig count in the fracking area where they're at, they think that we're going to see a decline out in the future here pretty soon in production, overall production. So we wait. Now, does that mean that the bottom is going to be where the production bottoms? No, that's not what it means. People are going to front run this. They're not dumb. Smart money is going to front run where they think the bottom is going to be, and they're going to start to accumulate before all this. So we probably have already bottomed in a lot of the companies themselves. That's why the charts of bottoming patterns and have already turned higher. And then eventually this is going to bottom in production, and then prices are going to go. They're going to go because we need 30+% growth per year to hit the demand of production, which is 11% decline rate and 20% growth rate. And I'm not saying that's 31%. You need to go more than that. Because remember, 11% decline and then you've got 20% growth on top is a little bit more than 31%. Coming down, we've got Eric. Says, so Friday recap. Trump is firing the Fed New York Governor Cook. A potential Trump loyalists take over the Fed is in progress. China ramped up its import of physical gold via Hong Kong. Thailand's SWF is doubling its physical gold holdings. Vietnam is opening up its domestic physical gold market to non-government private enterprises, importers, and smelters. India is fighting back against Trump's tariffs. Physical gold has now surpassed U.S. Treasury bonds as global central bank's #1 reserve asset holdings. Saudi Arabia bought a lot of SLV shares, the biggest silver ETF in the world. An entity bought a lot of GLD, the biggest gold ETF in the world, over 100x of an average GLD purchase size and the biggest GLD purchase since the founding of GLD. Number 9, the U.S. government's Department of Interior has proposed to classify silver and platinum amongst a list of other metals as strategic commodities. And as a bonus, BJ Milkshake is obfuscating again. All right, coming down to Grady. Gold miners ETF GDX is breaking out hugely on monthly time frame, with today being the last day of the month. Posted this chart at all 3 green dots, saying it was a big buy each time. Linked post below. I hope you caught the whole move as we did at the service. So there's that in 2022, the bottom. Another good time to add in a breakout retest, which was added. Here's where we bought all the larger gold miners at the service. I like the silver guys. I like silver a lot here. I like gold. I get it. I have some gold, smaller gold companies. I think silver's going to rip here, guys. Silver's going to blow by all this. And yeah, GDX looks good. This is a leader. This is a leader. SilJ is the one to watch, in my opinion, and the juniors in the gold space. Freight futures AM update. Dry bulk Capesize is flat. We got Panamax down 1%. Tankers VLCC is up 2%. And Suezmax is up 1%. And that's where I'm going to end it, guys. That's what I've got for today. Lots going on there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. We've got that special coupon code that's active, and we've got a Saturday Q&A session, which I'm releasing this on Saturday. So either you're going to make it, or you can watch the recording afterwards, which gets uploaded to the website. All right, guys, that's all I've got for today. We'll catch you next time, guys. See you.